traders, Todd here. This is going to be your video update for Tuesday, October 6th. And like the headline of this video says, this market, if you're long, probably tastes pretty good, like sausage. But if I told you it's inside it, I don't think you would be so happy. So here is the S&P, and we have, I'm actually showing you my alternate count right now. The first count that I've been tracking here on the free video is still intact, and this is another count I'm bringing up, just looking at it from multiple angles, and they both basically paint resistance in similar areas. But those of you who are schooled in Elliott know we are tracking a WXY correction off the top in July. We have the W wave down, and then I'm looking at a possibility that this might be a triangle in X wave. And if that's the case, we should kind of go sideways really through the end of October. And if you look at a time retracement of W wave, which brought us down to August 24th, compared to X, a 1.618 relationship, which would be pretty awesome, would be October 19th. 200% would be October 30th. And then a 2.618 would be somewhere in November. Let me just push him out. That wouldn't be that surprising. November, right around Thanksgiving. Okay, so that's the time. Now, the triangle is a 5-wave move, lower highs, higher lows, and labeled with letters. C wave right here has a pretty good fib resistance zone. 1985, which is the what did we do there? Oh, A wave projection compared to C wave. The blue 786 there is a retracement of B wave up in C, and I'm talking red here. Let me just show you the red degrees, keep it simple. So those are two, the pair of 786 retracements from the B wave as well as the A wave. And then if you get inside, we do an ABC up. The 1.618 relationship of C wave compared to A wave is 1985. So you have 85, 88, 92 in the SPX cash as resistance. We did exit our long positions. We did pretty well with. I was just putting together a recap actually for a client on our message board, and they're just asking about how the chronology of the trade went along. And basically, we bought the S&P there, we added to the position, we added a second time, we closed everything today. So pretty good. We caught like a 5% move in less than a week in the market in the indexes. So that's good. So I think we're going to get back down. I think we're going to drop down to D wave. In a triangle, each leg should have a 618 relationship to the wave in the two positions prior. So the D wave should have a 618 relationship to B wave, and that is going to be 1899 on the way down. If we get above A wave high, right around 2021 in the cash, then I'm wrong, and stop loss needs to go off. So resistance into 92. I'm wrong above 21. Target 99. Okay, to the sausage. What I don't like about this rally is if you look at the sector SPDRs, who led us up today? XLI was number one, 2.84% gain. Those are your industrials, energy, materials, financials. Those are your top 4 sector SPDRs. If you look at the percent change for the week, for the year to date, energy so far is the worst, but today it was in second place for second strongest. Materials is second place for the year, second worst, I should say, and it was the third strongest sector today. XLI was in third place in terms of being the third worst sector of the year. Today it was the leader. And then financials is right there, and that was in fourth place. So industrials was the strongest sector today, but it's third worst performer of the year. Energy was in second place for the day, worst performer of the year. Materials, third place for the day, second worst place for the year. Financials might as well be like fourth place, worst for the year. Okay, so it was the dogs that rallied today. Okay, you had healthcare, complete laggard. Healthcare for the year is still here in orange, third place, very strong. XLY was only the third strongest. Sorry, I should say it was the third weakest, or the 1, 2, 3, 4, 5, 6, 7th strongest sector today. Yet year to date, it's clearly the leader. So it was not the sectors you want to see rallying who made up this rally today. So All that being said, we are going short, and we're going to continue to press the short side. Speaking of, we are going to do this webinar tomorrow night. The first two were pegged. We can only hold 1,000 in the GoToWebinar room, and we had over 2,000 register both times. So we're doing this one more time. This is going to be tomorrow night. So basically, we are going to do the death of the liquidity bubble. What happens when this thing sells off? And the headline is supposed to be grabby, right? But basically, when you get in, I'm gonna show you how, if you're prepared for this sell-off, it doesn't need to be a crash. It's a correction with a lot of opportunity. If you're not prepared and you don't know what's coming, it's going to feel like a crash. So I'm going to show you how we're going to approach it. Show you markets for trading. I'm going to show you actually about 5 different strategies or how to trade this, and different markets like China, like different interest rate plays and stuff like that. So be sure to sign up. That's going to be Tuesday night, tomorrow night, 8 o'clock. And I'll link you over to the page right now. All right. See you guys tomorrow night.